Hey folks, I'm here. Been on holiday for a couple of weeks, so I have been out of action. But now back, I can make a little update video. So, I've got a lot to talk about, mainly fundamentals, and then we'll get into the charts. But first of all, I want to talk about the interest rate reaction. So, as we can see here, the US interest rates right now, or the Fed funds rate, is 2.5%. So everyone was expecting a 0.75% uplift, and it happened. And this is, and what happened is the markets went absolutely doolally. So if you look at, I don't know, the S&P 500, we had a massive surge across most of the markets really, or the US markets at least, on that interest rate announcement. And the reason it's absurd is because it's like the doctor saying, hey, congratulations, good news, you're not going to die of imminent, or you're not going to die of Ebola straight away. Instead, you've got radiation poisoning and you're going to die a slow, horrible death. And everyone's like, oh, yay, we're not going to die. And so the market then obviously pumped. But it is silly because rising interest rates, especially in the state of affairs right now, is game over. As I said, it's like radiation poisoning. So what's likely to happen is this random euphoria is going to sort of tail off. Once the market really, realizes the repercussions of it all. I mean, the US debt is like $31 trillion, and so rising rates is not good. And everyone is now obviously following suit. Well, or Europe's now catching up at least. So it's not good. And literally every time we've had global war of some sort, like we've had World War III recently with COVID, and the amount of spending that's happening, plus hiking rates into recession with rising oil prices. Every time that's ever happened in the last sort of 100 years or so, 70 odd years, we've always had a global crash. I'll come back to oil in a sec. So yeah, it's not good fundamentally. But is this going to be the standard jab, right hook? So the standard play, because the Fed always has to, and the Bank of England has to sort of give the facade that they have control of the market. But really they can't do much. They only have two levers. They can either print more money or not print money. And the other lever is rates, and they can only marginally increase them. So the jab, right hook could be raise rates, then pause, or raise rates, then cut, or raise rates, and then print, with the whole monkey pox bollocks that's starting, dominoing out of proportion. So yeah, that's that stuff. Let's have a look at the dollar. So obviously, what happens is that the dollar controls everything, as you heard me talk about forever, and what we're seeing is quite interesting. This head and shoulders played out literally perfectly. In fact, it went beyond what I thought it would do. And what I'm sort of eyeing up at the moment is something which is, well, I can't go into too much detail because I could be told off for sort of talking about a regulated asset here, but it would seem this is a bit awkward here. Yeah, long story short, it looks rather bearish in my opinion. As you can see, there's a bit of a support level that's being breached, and as you know, asset prices do the opposite to the dollar. So if the dollar crashes, stocks and crypto go up. As you can see, we've had big falling since 14th of July, and then if you just look at the S&P 500 from the 14th of July, here we go. Look, pretty much there. So from the 14th of July, stocks and what have boomed massively, and that's only because the dollar started tanking, and vice versa. So if we do get this weird sort of move down here, it's going to send stuff up, which is quite counterintuitive, especially if you're fundamentally bearish, just like I am. So do keep an eye on this. I mean, if this base support is properly breached and we see further movement down, it's going to be interesting to see, because I'm expecting some sort of market crash as in equities, but that won't happen if the dollar keeps on plummeting. Now, the other thing, which is why I'm fundamentally bearish, is we have two canaries in the coal mine. So we have oil and copper. Now, one of the reasons, or pretty much every time oil has rallied over $100, especially with the same sort of preset that we have at the moment, we've had a market crash, as in a global market crash, because the world cannot live above $100 oil. So we've had a massive spiking up into oil. Obviously, fertilizer costs have quadrupled, natural gas prices have pretty much quadrupled. So, you know, it harms economies, especially their purse strings. I mean, think about it from a normal family perspective. If your energy costs go up and the cost of food also goes up with that, you have less money to spend on other stuff. So you do less discretionary spending, and therefore GDP goes down. But the two canaries in the coal mine is that every single time this happens, and then oil starts to fall off a cliff, this is the telltale sign that the market is now slowing down, because the world basically drinks less oil because it's winding to a halt. And we can see this, you know, hopefully if we go to the weekly chart, will this show it? US spot oil? No. Evidently this chart doesn't want to play the long game. US oil, crude, here we go. So look at this. In 2008 we had the same thing. I know everyone pinpoints the subprime mortgage collapse, but it wasn't just that. It was oil obviously going to $150 a barrel pretty much. And then it absolutely cratered. And guess what? If you start looking at stocks from sort of 14th of July 2008 onwards, it was pretty much the same picture. So here we go. July, 14th of July had, yeah. So oil started crashing on the 14th of July. So somewhere around here, we had a little sort of relief rally, and then it was game over. So that's the first canary in the coal mine, oil. And what's happening with oil is pretty much exactly what I said would happen. Base support breached, Kobo, and it did a weak Kobo. And then the other thing is copper. Obviously, if the world is grinding to a halt, there's less copper being used. And look at copper. Copper, again, rallied into it, base support, textbook Kobo, and is now buggering off. So I am fundamentally bearish. I still am. So why for all this rallying? Why is Bitcoin suddenly rallied slightly? And that is because of bear market rallies. So let's look at the S&P 500. Everyone knows, you know, the stock market. Let's go back. And by the way, you've heard me talk about this similar look on stocks. If I just take a little screenshot of this. So this is on the daily chart. Let's move back to 2008. Same sort of 2001. Same. In fact, it's the same shizzle. You know, both sides. So this is the S&P 500 during the subprime mortgage collapse, the 2008 crash, otherwise known as the GFC, the Great Financial Crash. Well, look at this. It's pretty much exactly the same thing. What you tend to have before a global market crash is, you know, it's basically a declining topping pattern, as you can see here. And so this area where we are now, this green area, this is what's happening right now, is simply a bear market rally. Very similar to the bear market rally we had in August 2008. And bear market rallies are quite deceiving. So here, from that bottom to top, that was a 9.3% jump. The S&P 500, that's, you know, meaningful jump. What is it so far? Bottom to top, it's about 14. Yeah, so it's been, this one's a more violent bear market rally. But I guess the easiest way to look at it for crypto is if we have a look at, let's go to the weekly chart just so it's not so convoluted. Oh, God's sake, wrong one. Let's go to Ether with a bit of history. Here we go. So let's go to the previous bear market. And then actually let's go to the daily. Sorry. Scroll out. Right. So basically what you tend to have in bear market rallies is, or whenever a market drops 50 to 80%, you're then in the territory of a bear market rally. So here we had Ether crash 74% and then entered one hell of a bear market rally. It went from sort of 364 to about 800. So if we have a look at this again, we had basically 125% rally. Now I remember this clear as day in 2018 because everyone was like, "Oh my God, you know, everything, you know, base resistance has been breached. It's game, you know, it's game on, back to the moon, back to all-time highs." But that is the sole purpose of bear market rallies, is to make you think that, you know, gloomy times are over. So these are very whipsawy and it catches a lot of people out. But then what happens is, look, bear market rally is pretty much half of the picture, because then it goes from, it then drops another sort of 90%. We saw this with Bitcoin. You see this with stocks. It's heightened with crypto. Again, let's look at Bitcoin. Here we go. We had pretty much the same picture. So market absolutely capitulates, minus 70%, and then what happens is we have basically 100% pullback. Double top there, re-hits the lows, and then eventually takes out the lows. And so we then, from sort of these highs down to the actual lows, there's another sort of 72% crash. It hurts. And so this is why I'm short-term bullish, long-term bearish for crypto right now. So what are we seeing? We are seeing a big old crash, one of the worst that's happened. So again, a 74% crash, and what's happening now? We're having a bit of a I say lackluster. We've had a 38% jump on Bitcoin. So, you know, realistically, this could get a bit higher. The thing I've been talking about with Bitcoin for a while now is this clear air. There's absolutely nothing stopping Bitcoin up to 28k if it can clear 25. So if if Bitcoin can clear 25k, it will then literally zoom up like a vacuum, sucking it up to 28k. So that's something which I am aware of. And if you draw this support, look at that. So as you can see, this resistance has been breached, Koboed, and is now starting to move up. But if we can breach that 25k, we then move up to 28, and I would then like to short the shit out of Bitcoin and everything else if Bitcoin hits 28k, because then we're going to be smashing into this resistance, and then this is, you know, further falling down. It's a bit more pronounced with ETH because I'm focusing mainly on ETH at the moment. So here we had, looks like I've already done it, an 89% crash, almost a 90% crash with ETH. And what's happened very recently is a bear market rally of 101%. There we go. Now it probably has a bit more upside. Again, just like Bitcoin, there's this level which I'm sort of eyeing up. So it's very likely that we could see a move up to 2,000, maybe a bit higher on ETH. That would satisfy mother market, and I would sell everything. So yeah, I'm short-term bullish, as I said, and then hopefully, you know, we start seeing some warning signs in September onwards. Most market crashes happen in September, October time. So what happens with, here we go. Most crashes happen in sort of this red zone here. So yeah, we could potentially see a bit more falling. So a bit more rallying in the short term, followed by a bit more falling eventually. Now this is an absolute cluster mess of lines, but they all mean something. I put a video about this in the RT community recently. But long story short, these lines I think are quite important. So if I just draw that one there and that one there, we could have, no, it's not straight, a bit of a rising compression here. So this could actually just do this, and then we could have a fall. So I'm actually looking at this sort of, between 2,000 to that sort of, that little hole there needs to get filled, I think. And yeah, I put 20% of the whole pot into ETH last night actually. So we saw this massive confluence of support around this area, around sort of 1600 area. So I bought more ETH at 1600, and we've had a nice little pump up overnight, which is good. So yeah, so that's that. Also, in terms of fundamental bearishness, like, look at the debt clock. Obviously, you can't really place trades based on this, but it's just not, it's not good. US national debt base almost 31 trillion. It's growing very fast. US GDP going down very fast. And again, I love this website, web3isgoinggreat.com, and you can just literally see all of the crap that's happening in Web3, or crypto mainly. Just news announcement after news announcement of hacks and scams and exploits and layoffs and fines, and I think Robinhood got a 30 million fine recently. Yeah, here we go. So, like, when you see all of this crap happening, it's very hard to be bullish. So I think this is going to be a bear market crash, a bear market rally that's catching a lot of people out. So yeah, it's there's a lot happening. Cryptos pretty much won't go back to all-time highs until the US ETF is allowed, and that's not near. Oh yeah, the other thing I forgot to mention is what happens at the bottom of a bear market rally. So the thing which I'm always sort of talking about is that in terms of crashes is that if you have, I get my pen out. It's a bit thin, that. Let's have a thicker brush. Sorry, there we go. So when you have a market which is falling, obviously it's hard to know the bottom. No one really knows what the bottom is. And if you try and bottom pick, you could get caught out, because you could go, oh, here's the bottom, it's a 70% crash, and then, it can fall another 70%. So what you should do, or what I typically do, is you basically just, you draw base resistance like so, and then eventually the market will start to do its thing, and it should eventually start to recover. But you don't know if this is the bear market rally or not. There could be a bit more, there's lots of whipsawing, etc. But in order for a bull market to recover, there needs to be some sort of base. You don't see, V reversals like this and, bull market is resumed. You just don't see that. You have to have a bottoming out process where the market just fannies around for a bit. It may create some sort of triple bottom of some sort, but you need to see some sort of bottoming process and a more gradual growth like that. And so the safest time to sort of really get back into the market is around sort of anywhere around here, because this stuff is just pot luck sometimes. But when you start seeing casual growth, then yeah, hell, if you get in around here, your ROTE is actually quite good, your return on time invested, because yes, you've missed out on the lows, but you should expect that, but it's actually the safest time. So what could happen is the market could recover quite a lot, and you still be on the sidelines in cash, missing out on that bottom. But again, prime trade or trading 101 is that, let's say that happens, you will never catch the bottom. You just won't. You should pretty much understand that. So let's say this is a crash. Let's say you get in around late around here, and again you miss the first part of the crash as well. There'll be some sort of base support here, and then so with trading, it's all about shorting the shit out of stuff from sort of this area down to until you get and you'll lose the last chunk of shorts. So really, sort of this area, this is where you make your money. This bottoming process is where you lose a little bit of money because your shorts get stopped out, and then you're trying to decide, okay, is this a pullback, bear market rally, or is it reversal, etc. And then eventually, when you get in around here and the market starts going up, so that's what happens. So I have, for example, for the golden geese folks, prime example is I always sort of look at alt perp here because it shows crypto as a whole. Basically, crypto has just been falling massively. Every single month, it's like a 25% drop, 40% drop, 35% drop. And then recently, we had this one, 36% pump. And I've been on the sidelines. So it does look bad from a bit awkward from a portfolio management perspective because you're sat in the sidelines in cash whilst the market is pumping. But again, I'm highly aware of this bear market rally. Again, we don't just have quick reversals. So hence short time bullish, medium to long time bearish. Again, Bitcoin is in a bit of a channel, and yeah, we could see a move up to sort of 26, maybe I hope 28k. But the thing is with rising channels in a falling market, it's a continuation pattern. So this will eventually pop to the downside, whether it's there, from there, or from there. At some point, it will pop to the downside. But yeah, anyway, hope that makes sense. I will see you all soon. Toodles.